another time to do 55 minutes of business, going around the world of business. That's what we do on Business Incorporated here on Channels Television. For this episode, here's what we have prepared for you. In South Africa, inflation has dropped. We say congratulations and hope it is sustained. Nigeria's aviation sector will get the eyes of an international player right there. More adoption of the new Zimbabwe gold. 40% payments are being done with that new currency. Amini John Mekwa, let's do business. We begin from the global space as usual. From gold, now prices were trading below record high levels on Wednesday after a rally fueled by Western fund inflows and U.S. rate cut optimism as investors brace for the minutes of the Federal Reserve's latest meeting for clarity on the depth of cuts. Look at the numbers for this afternoon. Spot gold, we see, is in the green. It's up. Gold has been rallying since yesterday, and so it's 2,517.38, up 0 point, building on the good news of yesterday. And then U.S. gold also is up 0.2%, $2,555.20 per ounce. Spot silver follows suit. It seems the sentiment has spread except to one of them. So it's up. That's spot silver up 0.4% at $29.52 per ounce. Platinum is also up $953.35 per ounce. So palladium is the only one left out of this positive movement. It's down this afternoon 0.4% to $929.27 per ounce. And we know that gold has gained about $460. That's about 22%. This year, it serves as a hedge when there's uncertainty, among the normal currency, with geopolitical tensions and uncertainty created by upcoming U.S. presidential elections, as well as prospects of the rate cuts helping to push the precious metals. And then oil. Now, prices slipped on Wednesday on estimates showing that swelling U.S. crude inventories and expectation that tensions in the Middle East were easing following that tour by Mr. Anthony Blinken bringing succor to a supply fear. So we see Brent is down 0.1%, $77.11 a barrel. WTI also down even more, 0.2%, $73.05 a barrel. And still staying around the oil and gas sector now, but here in Nigeria, seems a bit of good news. I wonder if it's too early to celebrate. The management of the Nigerian Midstream and Downstream Petroleum Regulatory Authority has issued an operational license to Edo Refinery and Petrochemical Company Limited, and it is located at Ologbo in Ikoba, Oha, local government area of Edo State. The Chief Executive Officer of NNPCL, Mr. Ahmed Farouk, handed a certificate to AIPC, which is the parent company of Edo Refinery and Petroleum Chemical Limited. The issuance of this operational license is the final stage of approval from the regulatory authority, which implies that the plant can now fully operate as a refinery. Well, adding to the potentials of Nigeria, that is. And then the next thing, I guess, will be let's search for the crude that will be used for this. Now, still staying around that, in recent times, we've seen a lot of conversation around the oil and gas and attention given to the NNPCL. We saw their results, for instance. Now, let's look at those results. We're going to try to understand the impact of it. So we see NNPCL for 2023. Now, we begin with the company. We see the revenue at 23.99 million naira. Profits before income tax at almost 6 million, 5.988 million. And then we see profit itself at 3.297, and total comprehensive income for that period for 2023 at 19.773. Now we look at, this is for the group. Can we see for the company? We also have results for the company. Yes, so there you have for the company and not the whole comprehensive group of it. Revenue at 8.13 million, Profit before tax, just about 4 million. Profits, the general profit at 2.22, and total comprehensive income is at 11.779 million naira. Now let's talk to someone who can help us to understand perhaps the implication of these numbers. Of course, we've heard stories. Is the NNPC paying into the national coffers? Are they using it for subsidy? Is there subsidy? Let's try to understand some of this. Following these numbers, Dr. Chinan Dikwa, he's the Vice Chair of African Energy Council. Dr. Dikwa, good afternoon. Thank you for your time.
Hi, Ini. Good afternoon, and pleasure to be here.
Great. So a lot of people, when we see the numbers from NNPCL, we're like, what's happening? Can we compare NNPCL with Saudi Aramco? Perhaps it's too early for that. But what are the numbers, the profit that we see here from 2023, our revenue of about 23.99 million, that's for the group. That profit is about 3.2. What does it tell us about the running and efficiency of NNPCL at this time?
Thanks, Ian. And I think that's the fundamental question. What you mentioned there was the efficiency of running of the organization. But before I answer that, I would say this, Ini, there's a lot of reasons for us to cheer as Nigerians for this result that's come out. There are lots of positives we can take away, no doubt about that. Incorporated 46 years ago, NNPC never turned a profit, never turned a profit until 2020. So on the 40th attempt, it turned a modest profit, and it's been going up and ramping up all the way till 2023, which is what we're talking about today. So you mentioned it, I spoke about that, 3.3 trillion naira of profit, which is very decent. If you convert that to dollars, talking about $2.7 billion. So it's very significant, and I think a lot of reasons for us to cheer about. Now, there are other dimensions in there as well that I think people need to pay attention to, because profit is only one line item. There are other line items there that really we should interrogate. So what's the total revenue? Total revenue is total, sales, money that's come in. What's the cash inflow into NNPC? And I think that's the big one there. So the inflow for the year 2023 was 23.9 trillion naira. If you contrast that to 2022, it was 8.8 trillion. So a massive increase. Again, something for us to cheer about. But I'm saying that cautiously, When you look at numbers and you just compare year on year, 2022 versus 2023, a lot to cheer about. Revenue has been up 171%. If you look at gross profit, so not net profit like we talked about, gross profit in 2023, 7 trillion. In 2022, it was 2.1. So again, an increase of 233%. There are several of those where you compare 2022 and 2023 and the numbers look good. Total assets, just very quick, total assets on the balance sheet of NNPC, 246 trillion naira. Compare that to where we were before, about 58. A lot of reasons to cheer. But I think, Ini, the real question is in the efficiency of the running of that organization. And to answer that, we have to compare it to other peers, other companies in a similar boat, like Saudi Aramco. We can do that in the conversation.
Yeah, please do that, because I mean that's the question, and talks going on the lips of a lot of Nigerians. What are they doing that Nigeria isn't doing? If we have impressive numbers, what do they mean exactly? Do they touch the lives and the areas they're supposed to? Perhaps we could do a little bit of comparison, and that could help.
Absolutely. So I'll do that. So the African Energy Council, we've looked at those numbers, we've crunched the numbers, we tried to understand it and tried to compare NNPC with its peers. So the first thing I think that stood out for us is, one, what's the total revenue of Saudi Aramco? Now in 2023, they reported about 600 billion USD. And I'll be talking in dollars right now, so pardon me, because I need to compare these two companies. 600 billion USD. It's a very significant number. It's a big, big number. It's almost synonymous to the market capitalization of many big companies, believe it or not, And that's just revenue for 2023. If you compare that to our revenue, NNPC, talking roughly around 18 billion. 600 billion compared to 18 billion. So here we're talking about a factor of almost 33%, in my head doing the math. 33 times, I apologize. So their revenue is about 33 times, maybe 32 times higher than what we are doing. Then you now go backtrack and you say, what does our production numbers look like? Saudi Aramco's production in 2023 average was about 12.8 million barrels per day. You go on the other side where we are, roughly for 2023, yes, we're much lower because of all the things that were happening. Probably call it about 1.2 million barrels per day. Now, if you do the math between the two and you compare the two, we're probably talking a factor about nine. So they are 9 times our production, but their revenue is about 30 times our revenue. So you start to see, you talk about efficiency, you start to see that 9 times your production, 30 times your revenue. But why? So we interrogate those numbers and try to understand, well, what could those differences be? And that's the question we've been trying to answer. Yes, much of Saudi Aramco's production is onshore. That's true. Much of their reservoirs are a lot, shallower than ours. So their cost of production is much lower compared to ours. Yes, we have oil theft. Yes, we have, high operating costs and all of those high security costs. Yes, but those are the things that's robbing Nigeria off a lot of the profitability and the fund that should be going back into our coffers.
We do better. We agree we have high operational costs and all of that, but could we do better? Are we doing the best that we could? We're still discussing oil theft right here in Nigeria. I don't think they're discussing that in Saudi.
So that's a very important one that you mentioned there again, Ini. So just so you know, Saudi Aramco have a 99.8 availability of feedstock. Now, I'm going to say that again, 99.8 availability of feedstock. All of the systems and the processes that require feedstock, they get that about 99.8 times. Compare that to where we are right now. I mean, 2 weeks ago, we were debating, getting feedstock for the Dangote refinery. We can't even get it. He gets 60 million barrels. He needs 650, sort of 1,000 barrels per day. I apologize. We can't even get that. So these are some of the things that present a lot of challenges. When you look operationally in terms of how NNPC is set up, I still think that it has not gotten to that critical mass of running like a proper organization. There's still a lot of inefficiencies there. And I'll give you an example. Think about this, Ini. The ultimate goal of NNPC, and we've not hidden this at all, is that NNPC will go to market. It would IPO. You go into an initial public offering. Now, for you to go into an initial public offering, there's certain rules that you have to satisfy. The first of those is putting out your report on time. We're in August right now, and the report came out 2 days ago. All reports should come out in Q1. It's just a pure governance thing. So even from a simple governance, sort of corporate governance standpoint, we're failing. When you go into production, again, there are lots of failures in there. We can't supply feedstock. 20-30% of the crude that we produce, are unaccounted for. Much of that's being pillaged and stolen. A lot of these inefficiencies is what is robbing the country of the huge amount of revenues that we should see. But I think one thing I would say that's quite positive here is this, we're seen as going in the right direction. For the last 4 years, profit has been increasing quite substantially. And I think that's a huge reason for us to cheer. But can we do more? Absolutely. And I'll throw this number here. In the last OPEC report for the month of July, our OPEC production was 1.3 million barrels per day. Now, the OPEC quota, what we need to satisfy for that is about 1.5, so we're still very short of that. If you go to Wale Edun's budget for 2023, his numbers was based on 1.78. So his budget was based on 1.78 million barrels per day. We're 1.3 today, so there's a massive shortfall, which means we have to go and borrow for us to finance that budget. Okay, their aspirational goal is 2 million barrels. We're so far away from these things, and I think it's a huge problem. We need to put those governance frameworks for us to be able to make that happen.
Honestly, Dr. Dikwa, we could have you for the whole show, but we have to pause it here and hope to continue another time. But well, you're giving us a little bit of hope, saying we're in the right direction, even though we need to do more. So we'll take that home and go to bed a bit until we can have you again. Dr. Dikwa, thank you so much. Vice Chair, African Energy Council.
Thank you.
All right, let's move to the aviation sector now. And, well, you know all the challenges. But let's hear now from an international player in Nigeria's aviation sector. We're speaking right here in the studio with the Director of Sales for Africa and Europe of United Airlines. And they are planning, Mr. Torsten Letney, they're planning to increase, your traffic to Lagos, direct flight to Nigeria and all of that. And Nigerians are crying that tickets are too expensive. So I wonder what plans you do have as you increase your traffic. It means it's a good market. But Nigerians often complain that it seems, especially the international airlines, exploit consumers, Nigerians, because Nigerians don't have a lot of options. So I wonder how you would react to that.
Ini, first of all, thank you for having me. Excited to be here. As you touched on, we are now flying since 3 years, connecting Lagos non-stop with the US capital of Washington. We are really excited for our customer that this is happening. We're getting great feedback, and we are investing into the Nigerian market by increasing our frequencies. So as of this December, we are going to connect Lagos daily, every single day with Washington. And that provides lots of opportunity, obviously, for Nigerians to travel. And let me touch on your point in regards to pricing, and it's expensive. I can tell you the aviation sector is so competitive. So what we do and how we do, we gotta be competitive. If not, customers have a choice. Nigerians have a choice. If you don't want to go on United, you don't have to. We have to earn the trust of our customers every single day we operate.
So tell us about your experience operating in Nigeria. Funds getting trapped, policies, relations with government. Just tell us how it is.
Oh yeah, of course. Look, we as United Airlines, we operate to 67 countries globally. So we are really used to work with whatever the parameters are. For us, it's obviously crucial that we meet all the requirements, and we do so. We are happy to be here in Lagos. We are happy to serve Nigeria. The fund issue you touched on, happy to say that we do see the improvements that we have seen. We've come a long way, and we applaud the initiative.
And then the issue of operational costs, it seems to be higher in Nigeria than in a lot of other countries.
I actually could not make an educated statement around that, to be honest. Again, 67 countries, but obviously from an airline perspective, the two things that really drive the operational cost is obviously the ground cost, fuel, and then labor, that is. So, but more details in terms of what's different Nigeria relative to other markets or other countries, even within the African continent, that would be go too much detail. I'm sorry.
Yeah, the availability and pricing of fuel. I know that was an issue recently. Is that sorted now?
Where we are today, we are good.
Okay, so if you could or advise or make changes or any change at all. In the aviation space of Nigeria, what would you do?
Oh, obviously, we love an environment where there's least regulatory challenges. Every market, every country is different. Again, as I said, 67 countries we fly to, so we are really used and very experienced working with all of those. For us, we invest in the market of Nigeria. We think there's huge potential, and we feel really good about coming here to Lagos. The one thing that we have learned over time is if you want to be successful in Nigeria, you must come with your best product. And that's what we are doing. And not only every other day, every day we fly, every day we operate, we have product consistency. We come with our beautiful Dreamliner. It provides space, it provides opportunity. We have 4 different classes of service. Customers have a choice, obviously depending on their budget, but as well as in terms of what are we offering on our aircraft.
Yeah, so what's the future? You talk about investing in the potentials and all of that.
What we do is today we operate 3 days a week nonstop to Washington. This December, we are starting to fly non-stop every single day until to Valentine's Day, which is 14th of February 2025. So that's an investment. If you think about it from our headquarters, Chicago, United States, where we allocate our aircraft, that's a huge decision to make. And backstage, behind the scenes, we have huge competition because everybody, including myself, raising hands, say, "Hey, give me more aircraft. We like to do more in the Nigerian market." So for us, it's great. It's one step. Today is not announcement day, so we are not here to say, oh, that's what we are going to do next. But we like the market. We invested in the market. Nigeria is a focus market for us.
All right, just before we let you go, Mr. Letney, what's your best Nigerian meal?
So this is my fourth time to Nigeria. I love to come. It's really interesting. It's spicy. I forgot the name. I cannot pronounce
it. Pepper soup?
No. It's rice.
Jollof rice?
Yes, red. It's red. It's spicy, but I like it a lot.
It's jollof rice.
Yes.
Have you eaten that of Ghana? Because there's a competition going on.
Okay,
have you tasted Ghanaian?
Yes, I know. I've done it too. So next time I go to Ghana, I go to Nigeria, I'll do a competition for myself. And if you have me back on the show, I'm happy to report back.
Sure, of course.
Thank you so much.
Thank you so much,
Pleasure.
and welcome to Nigeria.
Thank you so much, Vivi.
So that was Director of Sales for Africa and Europe of United Airlines, Mr. Thorsten Netni. Thank you.
Thank you.
Have a safe trip back.
Thank you. Nice meeting you.
Let's take a break. When we come back from that break, we'll head to the markets right here on Business Incorporated. Stay with us. You're welcome back. Still watching Business Incorporated on Channels Television. We head to the markets now, and I thank God I'm not wearing red, but from the corner of my eye, I do see red. This is not me. Will Ibong, Mr. Bismarck Rwani, I'm not wearing red, but there's red.
This is not on me. This is not on me.
I want it to be on record.
Well, you got a touch of. Okay, it's pink. I was going to
Thank God you have glasses on.
I was going to attribute
something
this
to
you.
clean it so you can. so I'm out of this.
You're out of this. But yesterday we closed in the green, so we saw that rebound from the negative close we had on Monday. But the market has not been able to sustain that. We've seen this negative.
I think the name of the game now is profit taking.
It's profit
It doesn't
taking.
matter how small, because you see stocks that lost the day before and continuous profit taking on them, and you wonder, are you sure you're making profits when you're selling off at this time?
It's understandable. Our analysts have mentioned that the month of August is, historically has been the lowest month when
sell
you
and go
yes, a lot
away.
of sell, and a lot of people. I guess I had on Saturday mentioned about school fees. People have obligations. Yeah, a lot of people are taking monies, especially holidays right now. People want to travel, so they're selling off, and going for a holiday. So it's time to cash in, from the profits that they've made in the stock market.
Great.
So let's check in on the major stocks in Africa. We talked about Nigeria's. At intraday, mostly negative sentiments were seen. Nigeria's NGX was down. The index, as I mentioned, was not sustaining the positive close we had on Tuesday. Profit taking, no doubt, but we see South Africa's JSE at intraday up 0.4%. Also, EGX 30 was struggling to stay out of the red zone at intraday. Marginal downtick. Meanwhile, the EGX has approved the listing of Export Development Bank's $50 million capital raise. Now, let's see Kenya's close for yesterday. That's Tuesday. It closed in the positive 0.64%. Now, it's rebounding from that Monday's negative performance. And let's swing quickly into the fixed income space and get a sense of what's happening there. Chuka Nwachukwu is the group head, Asset and Liability Management, is joining us. Good afternoon, Chuka. Very quickly, let's get your opinion. The federal government's $500 million bond is ongoing. We have 10 days before the offer closes. Tell us what the turnout has been like so far since they opened on Monday.
Good afternoon, Will. The federal government dollar denomination bond is the first of its kind. It's in series of 500 million at a yield of 9.75. Participation has been quite good, quite encouraging, especially with the Nigerian diaspora Nigerians. They've seen this as an opportunity to invest in Nigeria market, especially as regard the dollar-denominated instruments. That will also give them a bit of comfort in terms of if they need to move these funds out. So for now, we have up to 30th for the bid to end. But so far so good. It's quite encouraging. Participation is highly encouraging.
Okay, so let's look at the bond offer for August. The bond auction we had on Monday, the offer was 190 billion compared to 300 billion the offer we had in July. What factors do you think influenced the DMO's decision to scale back, from the previous month's offer?
Well, I think if you watch the borough plan for DMO, they have a specific threshold they need to meet, especially as regard the local market, and in this case, the bond market. So you've seen the offer reduced, like you mentioned, from 300 billion to 190 billion. But however, well over 374 billion was sold, so obviously it was oversubscribed. The 2033, which is the longer end as regard the offer, as regard what was offered, had a lot of suspicion. The major attraction was on that security due to the fact that investors, and then the traders have gone short, and then of course they are looking to cover, aggressively in the market, and primary market is actually the ideal place to cover, profitably. And so, for me, the interesting part of it was the fact that we saw yield drop by 46 basis points. The last auction result came out 1 year. The longer end, which is 2023, came out at 21.98. We saw about 46 basis point drop to 21.5. So this has actually affected traders. Like I said earlier, people who had gone short, we obviously need to cover from the primary market, and that would be probably quite expensive in terms of covering their position.
Okay, but let's just move away from there and look at the auction that's taking place today, where about 409 billion naira is on offer, the Treasury bills auction. Can you just say that this is even coming shortly? We just had the inflation numbers. We saw that slowed down the first in 19 months. And we're also expecting the NPC meeting in September. What do you think will be the expected outcome for this, seeing that, yields are dropping in the bond space? What do you think investors will be doing for the NTB auction?
Yeah, like you rightly mentioned, we have about 409 billion on offer. Like I said earlier, we've gradually seen yield, drop. This is because, elevated yield above 21%, 22%, it's quite expensive. DMO obviously will not be able to cope in terms of repayment. And so strategically, the government is beginning to drive down the yield. This auction, like I said earlier, we're expecting that it will probably drop around between 35 to 50 basis points. For me, the areas are, those levels are also very good levels. I do not think that the DMO will increase the yield, the rate at this auction. I think that it will hover, like I said, within that 40, 50 basis point drop, especially at the 1 year, which is the longer end.
Thank you so much, Chukanwa Chukwu, Group Head, Asset and Liability Management at UBA. Thanks for sharing your perspective on Business Incorporated.
Thank you.
So let's look at other markets now. We look at the Gulf, that's the Middle East, where mixed sentiments were seen at intraday. Abu Dhabi was down 0.07%. Dubai, on the flip side, was up 0.27%. Still within the region, Saudi and Qatari indexes traded in opposite directions. We see Saudi up 0.6%, while the Qatari index traded down 0.39%. And there are also reports of Saudi and China yuan-based oil trade facing some tough challenges ahead in terms of scalability. Now let's check out U.S. now. In early trade, stock futures are inching up on Wednesday as traders gear up for the release of the Federal Reserve's latest policy meeting minutes. Everyone's eager to see if there's any clues about a possible interest rate cut. As of now, the Dow Jones futures was up 0.14%. S&P 500 futures also rose 0.12%, and the Nasdaq futures slightly up by 0.09%. And this comes after a bit of a rough patch in the markets. Both the S&P 500 and Nasdaq Composite ended their winning streaks. But let's get it more from yesterday's performance with our correspondent, Maria Bird.
The U.S. stock market took a bit of a dip on Tuesday as the Dow Jones was down at 0.2%. The S&P 500 was also down at 0.2%, and the heavy tech Nasdaq was down at 0.3%. It is clear that investors are watching to see what will happen between Chairman Powell and the banks. As the meeting planned at the Jackson Hole is one that has great expectations, as there could be insights into the interest rates, whether or not the U.S. will see a decrease in interest rates over the next few months. This will be one that investors will be seeking to see as the U.S. economy continues to remain pretty strong, but the U.S. stock market seems to have taken a bit of a dip over the past few days.
Thank you, Maria. Thank you, Maria, for that. All eyes now on the Fed meeting and the minutes they're going to churn out and to see what's next for interest rates in the U.S. Now, let's look at Asia, where most markets were mostly red. Wednesday, they closed red following a pause in the U.S. market's winning streak. Japan's Nikkei 225 slipped 0.29%, dropping down to 37,000 points there. The Kospi in South Korea up on the flip side, 0.17%. And latest trade data showed, that's in Japan, showed that we saw a 10.3% rise in exports and a 16.6% increase in imports for July. And it's also worth knowing that this data comes just before Japan's recent interest rate hike, which has strengthened the yen. In other markets, we see the Hang Seng in China, we see that also up at intraday. I'll see Shanghai markets, that's in China, down at intraday. To close the market, 0.35%. And the S&P ASX in Australia up 0.16%. And this is also adding up to, the markets closed past the 8,000 points. We saw it dropping yesterday at 7,000 points, but this is the first time the market is going to be crossing this 8,000 mark since the market turbulence we saw last week, earlier this month, actually. So a lot of things are happening in terms of inflation and rate cuts right now. We see South Africa's inflation rate dropping to 4.6%. That's from 5.1 that they saw in June. So Nigeria's inflation is also dropping. So I think it's a season of rate drop, interest rate drop. I think inflation drop rather.
I think you should have a cautious optimism because we know the drivers of that drop of inflation was seasonal. The waiver that the federal government has started, which ends in December, the harvest season, these are they're fed into that drop in inflation. So let's just manage this excitement so that we don't have a broken heart.
Okay.
When the reality comes knocking again.
I'll just keep my fingers crossed and hope that the drop continues.
Yes. Thank you so much, Will. Let's head to London now, where British holidaymakers face a €7 fee for visa waiver to travel to Europe next summer under the long-delayed plans. I wonder if this has to do, with, the old talk of leaving the European Union. But Juliana has the details. She has first-hand information. Hi, Juliana. Good afternoon. What's this about?
Good afternoon, Inni. I think you were looking for that B word, weren't you? Brexit. Which is quite funny, actually, because when I was reading up on the story, I was like, I haven't actually discussed Brexit with Inni for a couple of weeks.
Surprising, very surprising.
Although that's not surprising, although that's not the main reason why the European Union are imposing this new European travel information and authorization system. Certainly the pundits on British Airwaves are discussing this as a potential fallout, and perhaps it is. We'll have to see what the EU have to say, but they have made an announcement this morning about this new system, ETIAS. So any of our viewers that live in the UK or our viewers watching from Nigeria that have a British passport, you'll be aware that if you're traveling to America, you've got to get a visa waiver, which is called an ESTA. So again, it's pretty much processed within minutes if you're successful. So we've been doing that with America for decades, and now the EU are bringing in their own version called the ETIAS. As you say, it cost €7. It's due to be implemented in May 2025, so just at the start of kind of the spring half term. And one of the reasons why the EU has said they're doing this is because they want more border controls in response to an influx of migrants and concerns over terrorism. Now, a couple of weeks ago, just after Sir Keir Starmer was elected UK Prime Minister, he did actually host European leaders in Blenheim Park, I believe, for a summit. And a lot of the discussion was focused on migration and how they are going to tackle the crisis we have an issue here with small boats. But my goodness, we're not getting the illegal migration that's happening on the continent. And that is one of the reasons why they say they're going to do it. It cost €7, as you say, that's about £5. So it doesn't cost that much money. But, Brits are not happy about it. And again, because there are always Brexit discussions that keep coming up every couple of months, the public reaction has been, this is a fallout of Brexit. But when you read the text, you realise it's not. But perhaps Brexit is all part of this. It's the gift that keeps on giving, Ine.
Yeah, a gift that keeps on giving, Juliana. So let's look at investors now. I hope they're in a very good mood this afternoon.
Yeah, pretty good mood. Tip-top shape at intraday. Quite interesting. There's been a lot of negative reaction about UK borrowing figures. We've got some data out from the Office for National Statistics looking at July borrowing really high. I believe it surged about £3.1 billion. This is going to be a massive headache for Rachel Reeves and Sir Keir Starmer. They're pretty lucky because Parliament is at recess at the moment. They're all on holiday. Nobody's really holding them to account. But we know there's going to be a really difficult budget coming up in the next couple of months, because apparently the money that Jeremy Hunt, her predecessor, said was there isn't there. But one of the accusations that the Conservative Party put to the public about Labour is that they're going to be borrowing because they can't afford some of the public services that they pledged during the election. And this is our first inkling into that. Is it going to get worse? We'll just have to wait and see. Despite the negative sentiment on the airwaves, it hasn't trickled down to investors at intraday because the all share is up. It's up by 0.22%. The FTSE 100, the blue chip, is up by 0.99%, and the FTSE 250, that's up by 0.19%. In the currencies market, the British pound is trading down against the US dollar by 0.10%, down against the euro 2 by 0.02%, and up against the Japanese yen intraday by 0.39%. Ine.
All right, Juliana, thank you so much. Now let's move to Europe. We're talking about right there, and Tesla and taxes is also a story there. Tesla won a big cut in tariffs imposed by the European Union on the EVs, electric vehicles, that it makes in China for months. It won't last for months. Well, the EU discussed tariffs on vehicles imported from China, citing subsidies from Beijing as a reason. But now Tesla and its Chinese-made EVs will pay less tariffs to the EU than their rivals. Let's find out why with Wada. Hi, Wada. What's this about?
Thanks for having me, Ini. So there's a lot of layers to this decision and a lot of moving parts. Let's start with looking at Tesla's petition to the EU. The American automaker had requested a recalculation of its extra tariff rate, which was previously 20.8%. That was agreed upon in July. Tesla said that it received less subsidies from the Chinese government when compared to other Chinese EV makers. The EU calls these subsidies unfair, and it says that it impacts the level playing field. Brussels then looked into the claim and found that Tesla's claims were valid, so they slashed the tariff from the planned 20.8% to just 9%. Just for context, the EU is still pushing for extra tariffs up to 36.3% on other Chinese EV makers.
Interesting and good for Tesla. But what's China saying about this?
The response has largely come through China's Automobile Manufacturers Association. And as expected, they are not happy with the tariffs. The Auto Association firmly opposes the implementation of these tariffs on Chinese-made EVs. They said it brings enormous risks and uncertainty for China's operations and investment in the EU. So the mood is quite pessimistic. And just today, Beijing announced an anti-subsidy probe against the EU on dairy imports. It's a classic tit-for-tat situation, but it can really complicate trade between the two entities, and that will create a hostile environment.
Yeah, tit-for-tat indeed. But let's look at investors this afternoon. What are they doing? What's on their agenda?
Well, investors are looking at a bunch of things, actually. They're closely watching the Democratic National Convention happening in the U.S., where presidential candidate Kamala Harris and fellow Democrats are firing up their voter base. The markets, however, are looking at what the implications would be should she come in power. Usually, investors are keen to gauge how the economy would be by looking at planned policies. And analysts think that she may be more aggressive than Biden on taxation. So there's a lot of eyes on the US and what a Harris presidency could mean. In Europe, shares remained flat as investors look ahead to the US Federal Reserve and their comments. The pan-European Stoxx 600 held its ground today. Austrian company Voestalpine rose to the top of the European benchmark, and Swiss eye cream company Alcon lost 2.2% after reporting a smaller than expected increase in sales.
All right, Wada, thank you so much for that.
Thank you.
Now let's come back to Africa, see what's happening. We begin in South Africa, where inflation rates there slowed to 4.6% in July. That's the lowest in 3 years, bolstering the argument for a potential rate cut by South Africa Reserve Bank. Well, the data aligns with South African Reserve Bank's goal of stabilizing inflation at 4.5% target midpoint and supports expectations for monetary policy easing in the coming months. We're staying in South Africa, where there is that conference which has been going on. Our correspondent Innocent Semosa is at that Engage 24, which is a meeting of like minds. Now, Innocent had an interview with a member of the sustainability panel.
Africa we are very centered around our land and our people. We are very blessed with natural resources, and we are very blessed with a young, vibrant population. And so to think about our future with our people in mind and with our natural ecosystem and natural resources in mind, and with a mindset that allows us to grow through investment in people, in ecosystems, in human capital, in biodiversity, and ensuring that we're taking into cognizance climate-related risks and opportunities is definitely something that we need to focus attention and energy on. And the ISSB standards have been developed as a global common language, as a global baseline for sustainability-related and climate-related financial disclosures, which are supposed to be included as part of general purpose financial reporting. And they are designed specifically for global capital markets and are very focused on material financial effects. So current and future anticipated financial effects that arise from sustainability-related risks and opportunities. So it's really about creating a common language so that companies and investors, for example, can have a conversation around mitigating risks, managing risks, and unlocking opportunities and unlocking capital flows.
Now we go to Zimbabwe, where that country, Zimbabweans, are using the nation's gold-backed currency for 40% of payments compared with 20% when it first started in April. The ZiG, that's what it's called, abbreviation for Zimbabwe gold, is only in circulation in electronic form, while citizens continue to use the US dollar for most of their transactions. The government uses the ZiG for 80% of its trade. The Southern Africa country introduced the ZiG on April 5, replacing the Zimbabwean dollar after it erased almost all of its value against the greenback. The ZiG is the country's sixth attempt at having its own functioning currency over the past 15 years and is backed by foreign currency reserves as well as precious metals. The president, Emmerson Mnangagwa, hinted at the possible adoption of ZiG as the sole currency as early as 2026. That's ahead of initial 2030 deadline, a proposal that the bankers support. Now let's head to the crypto space and see what's happening right there. Of course, we know, I did promise in the morning we're going to discuss that SEC's proposal that they will soon begin providing license to virtual assets, which of course includes cryptocurrency. Let's look at the board number and see first of all what the number is looking like. And I see a sea of red for the board. We see Bitcoin has dropped from what we had yesterday at $59,359.48. And that's a drop of about 0.2% in the last hour, but much more than that compared to when we had this conversation yesterday. Ethereum follows suit, follows the king of crypto, the Ethereum, the king of old. So it's down 0.13%, $2,583.19. BNB and Tone and some of all those other little ones are able to escape it, but mostly we see that the board, I wish they wouldn't do that. I wish they wouldn't do that. We see that mostly that it's a red color for the board and the coins at this time. But now let's talk to Gilbert now about that expectation from the Securities and Exchange Commission here in Nigeria, where they say they're going to be giving license to virtual assets very soon. We don't have a date yet, but maybe Gilbert has heard something that I haven't. Hi, Gilbert. Good afternoon. So what else have you heard about this promise from the Securities and Exchange Commission?
Okay, it is that we are going to receive this license this month, and the SEC.
This month, did you say this month, August? Today is 21.
Oh, yes, this month. That's what the comment of the Director General of the SEC says. And this move is proactive, it's commendable, even though it's in contrast to the CBN's earlier ban on crypto-related banking activity. But this move shows that there is a shift towards a more structured and transparent management, in the country. And the Director General comment tells me he understands the urgency and the potential this initiative has. And this initiative, it has in the country, and the role of fintech in empowering the country's youth and also supporting economic growth. And I must say he's a round peg in a round hole. And the plan to license, issuers of visual assets, including crypto, will position us as a leader in crypto regulation in Africa, and also within our global counterpart, which includes South Africa. There is France and also the UK, which have already implemented or in the process of implementing a similar regulatory framework. And it's great to see our country balance innovation and also investors' protection at the same time.
Yeah, but not getting ahead of ourselves, Gilbert, because even if this license is given, and you have FIRS, well, FIRS hasn't given a date on their side, but they've said that they're going to look into regulating it. Does it automatically, and you've also noted, of course, the sentiment of the central bank at this time. So even if this license is given, does it give a free or a leeway for operators to dive into the market?
Okay, the thing is that CBN's scrutiny, is just that it does not want banks to interact with cryptocurrency. That is it. But then the XCC, giving this license means that there is a regulatory playing ground for investors, for institutional investors, because most institutional investors, before they dive into some asset class, always want a regulatory playground. And then we also have the initiative, to tax visual asset coming up next month. So this is giving us more that there's a regulatory playing ground, but then we will still go through some kind of challenge in transacting, with the banks. But I think this is also a favorable move to the banks, because the banks need to understand that they need transaction to occur, and the more they make a more friendly playing ground at the same time for players in the industry to interact with them, it's going to give a whole lot of volume, even in banking transaction. And I think the banks stand to gain more with the interaction with cryptocurrency and not the other way around.
Okay, let's leave Nigeria for a bit. I wonder if the minutes of the Jackson Hole conversation from Mr. Jerome Paul is out. It wasn't out before I came because, of course, that's what the market is waiting for. We could see one movements one way or the other, depending on the minutes or the contents of the minutes.
Okay, this is a very interesting meeting that will be taking place, the economic meeting, because smart investors and market watchers are also anticipating the outcome, because what we're trying to do is we want to gauge in what is the sentiment, how can we get clues to what the rate cuts that will come in September will be like. First of all, there was over a 74% chance that there'll be a rate cut by September, and then the last CPI number below 3%, which came at 2.9%, validates that, okay, we are going to see rate cuts comes from September. So what we're trying to have clues about is it going to be a 0.5 or a 0.2% cut? And so this is why all eyes is on Friday's Jackson Hole Economic Club minutes and reports that will be out. We want to price in what will be the rate of the cuts that will come by September.
Yeah, we'll continue pricing and, of course, counting down to that. Thank you so much, Gilbert Jokpata, for your time this afternoon.
Yeah, thanks for having me.
So that's it on the program. Thank you so much. I do hope it was worth your time, and we'll make it better tomorrow. God's grace. 10 a.m. I'll be back with Business Morning, and then we would do the 1 p.m. again. I'm Ini John Mekwado. Enjoy the rest of your day. Bye-bye.